Charlie Munger and Ken Griffin are right about 2023 prediction. From recession to depression, a long way to go down for stocks. Oil just dropped to $75 a barrel on Monday morning as TLT was up in the green. Dollar is going higher as stocks are heading lower, at least for the high beta stocks. This is a deflationary recession signal. At the start of this year, oil was at $74 a barrel, even in the Ukraine war and European energy crisis. We are low on refining capacity. The demand is getting weaker based on the price of the oil. This is showing the Fed is doing the right thing. As Dr. Lacey Hunt said, all they need to do is keep going. They need to crush inflation like a bug and do whatever it takes. But will they do that? What will happen if the Fed decides to pivot? Charlie Munger and Ken Griffin are both one of the most successful billionaires of our time. What are these billionaire investors' predictions on where the Fed will take us in 2023? Will it be a recession or a depression or a stagflation? I will explain it all right after this. And of course, smash the like button. If you want to be my good boy, apply to write your first book with me. Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here. And you know what to do, and push my button if you like what you see in today's video, because I can't push it from this side. This video is brought to you by my Patreon. If you are a good boy, go to patreon.com/magicalgoddesscheryl to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want it to be real. You want it to be true. You need to be my client, don't you? Oil price is extremely hard to predict in the short term. For a lot of oil experts didn't see this 5% drop coming. There are a lot of speculation in a lot of commodity trades. Check this chart out. Within 3 hours, oil is bounced back to $79 a barrel from the low at $75 a barrel. Anyways, oil drop lower means demand is getting weaker. Now let's dive right into Charlie's thoughts. Charlie Munger supports the Federal Reserve's efforts to crush inflation, even if they drag the U.S. economy into a mild recession. I think the Fed is willing to have a little recession in order not to have out-of-control inflation. Warren Buffett's business partner and the 98-year-old vice chairman of Berkshire Hathaway said about the Fed's policy. That's what they're supposed to do. They're supposed to be the one guy at the party that doesn't hang around the punch bowl getting drunk. Yearly inflation soared to a 40-year high of 9.1% in June and dipped to 7.7% in October. The Fed has responded to cool the economy and relieve upward pressure on prices. It has lifted its benchmark rate from nearly zero at the start of the year to 4% today and signaled it could peak above 5%. Munger also noted the Bank of Japan has maintained a policy of ultra-low rates for years. If you look at Japan today, you would find that their central bank has made our central bank look like a little mouse that hardly tries to do anything. The 98-year-old investor said he largely approves of the Fed and argued it saved the economy by cutting rates and boosting bond purchases when the lockdown crisis struck in 2020. We were in enough trouble when this thing started that if the Fed hadn't done what it did, which was very aggressive, we would have had one hell of a mess, which would have been way worse than what we have now, he said. Munger also bemoaned the wild hype and reckless speculation that drove up the price of stocks, cryptocurrencies, housing, and other assets contributing to red-hot inflation this year. Of course, in every crazy boom, there is crazy excess, he said. I don't like wrenched excess and manias and so forth. And we have a lot of that. On a related note, the 98-year-old investor called out rampant fraud and delusion in the crypto industry. Days after Sam Bankman-Fried's FTX exchange collapsed into bankruptcy. He said, we don't need a new wonderful, non-traceable medium that makes it easier to commit frauds of various kinds. What is Bitcoin doing for anybody? Munger gave the example of ransomware attackers demanding Bitcoin as payment. It pains me that in my own country, I see people who once were regarded as very reputable people helping these coins exist, promoting their use, and so forth. This is a very, very bad thing. The country did not need a currency that's good for kidnappers, and so on. The danger flags are waging so clearly. A guy says, I'm going to sell you plenty of nothing, and nothing's plenty for you. When you hear that, you ought to think this is a big joke. But people think this is a real asset. It's not a real asset. It's a bunch of fraudsters and crazy people. Nobody can invent a new thing that makes every 12-year-old kid a billionaire. It's crazy. It's demented. When I see magic, I believe somebody's trying to fool me. I think that's why all these crypto brokers reported such huge growth, like 200% to 1,000% growth in revenue in 2021. They all, from growing to the moon, now to going bankrupt within 1 year. I think that's what Charlie's talking about. They are trying to fool those YouTube investors. It's partly fraud and partly delusion. That's a bad combination. I don't like either fraud or delusion. And the delusion may be more extreme even than the fraud. Munger was discussing whether crypto executives have good intentions. Reputation is very helpful in financial life. And to destroy your reputation by associating with scumballs and their scumball promotions is a huge mistake. A lot of finance YouTubers promoted these crypto brokers for at least a year. They are getting paid millions, and they now have earned a stamp from Taylor Swift's bad reputation. Now let's get into Ken Griffin's head. The billionaire investor and Citadel CEO said, FTX is one of these absolute travesties in the history of financial markets. People are going to lose billions of dollars. that undermines trust in all financial markets. When talking about inflation, he said, "We think we have seen peak inflation. We think by the end of 2023, our central view of inflation will be back to roughly a low to mid 2% range." Griffin suggested metropolitan rents and energy prices have already peaked. "I can't imagine how many flat-screen TVs were sold to Americans that are frankly not used nearly as much today as they were a year ago. This shift from a goods-based economy to a service-based economy is going to create depreciation in the pricing of goods, which will help bring inflation down. For the Fed to truly conquer inflation here, we're going to put unemployment somewhere in the mid 4% range. I find it hard to believe we're not going to have a recession at that point in time, sometime in the middle to back half of 2023. It's not yet time for us to change course on our monetary policy. We want to see that we put the inflation genie back in the bottle. We've endured a ton of pain in getting to this point. The housing market is definitely under duress. Durable goods sales are under duress. We haven't gotten the job done. To take the foot off the brake right now and not finish the job is the absolute worst mistake the Fed could possibly make. Griffin explained why the Fed can't back down in its inflation fight. It's sort of like saying you go to your doctor, you've got a bacterial infection, and he gives you 10 pills to take, and you stop taking them after pill number 7, and then you relapse a few days later. If we don't finish the course of antibiotics and inflation starts to flare back up, the Fed will have lost credibility. If the Fed loses credibility and inflation expectations unanchor, then the amount by which we'll need to raise rates and deter economic growth will be a much bigger bill to pay. We shouldn't put ourselves in a position to pay that bill. We should get the job done now. The United States has no ability to produce anywhere near the number of semiconductors it needs to run its economy. We are utterly and totally dependent on the Taiwanese for modern semiconductors in America. You can argue that by depriving the Chinese of access to semiconductors, we up the risk that they seize Taiwan. We're playing with fire here. If we lose access to Taiwanese semiconductors, the hit to US GDP is probably in the order of magnitude of 5% to 10%. It's an immediate Great Depression. Okay, now I'm going to show you my clients David Vine and Jema's book, Ignite the Passion, Co-Create Your Dreams. Such an awesome book. And my client Taddy Eazzy's book, Wicked Pussy Perfume. It is an erotic novel. Such an amazing book. Taddy Eazzy is such a good boy for being my client. And my book time. It is a bestseller, this one. You are such a good boy for watching my video right till the end. Bye.